What is up, YouTube, and welcome back to another Fridge Financials video. And today's video is a little bit of a shorter one, just kind of breaking down some updates on the double calendar positions that we currently have on the portfolio. So if you're excited for today's video, as always, feel free to like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. We're covering 3 double calendar options plays right now to kind of go through a little bit of each one, give you a little bit of an update, and talk about where we are at with one of them in particular. Because one of them in particular is kind of not what we're really happy with as of this moment in time. I want to talk about the strategy and kind of where we're going from there, break the numbers down, all that kind of good stuff. So first one, the one that we are not really doing much with, we still have a little over a week away, is on Intel. Intel does have their earnings. I believe it is after hours on Thursday, if I'm not mistaken. And so what we basically looked at here was opening up a double calendar option play here. We did 5 contracts here to make it be worth a total of $105. Again, expiring on the 25th, which will be next week. And then that's for the short options that you see here and here. And then the following week after earnings is August 1st. So again, the good thing is what we're looking at for these kind of positions here and how I'm managing them, I'm looking for that decay to take part in the options. And as long as Intel trades between those two strike prices of 21 and 26, then those short options become worth a lot less and we can be able to maximize more profit. If you take a look at one of these options here, this one is already up $110 on the call side here, which is really good to see. And on the put side, this one is down $50. So still overall, quote unquote, up about $50 or so on the, if I was to close these today. But obviously as the options decay more and more and more, they will be hopefully become more value to us. So that's kind of what we're looking at. Intel, again, they have earnings next week. So I'm kind of just going to sit back on my hands, let this one kind of play out a little bit and see how it does. The next one that we have that we're looking at that's doing also really well for us is Charles Schwab. The reason why it's doing so well is because the strike prices we're looking at are $86 and $98, and 92 is like the halfway break-even point between either way, and it's trading just under that halfway middle ground, which is great to see as a result. What you will notice is that since they have earnings coming out on Friday, I'm going to close the short legs tomorrow before market closes, and maybe we'll put that in another time. We'll do another update video on it. But what you'll see here is that the 98 calls have lost a lot of value. This is now worth $35, which is good to see. And then the put side is also lost a lot of value. We're up about $40 here. So we're about $75 here. This trade costed us $33. I did one contract only on a previous video that you'll watch. So cost me $33. Right now we'd be up 75 or so. Plus we would have the straddle left over to close out Friday morning after market opens. So Schwab looking really good right now. Not touching this one at all. I do not need to because it's trading right in between. The biggest problem that we are dealing with right now, and as you'll see I typed in earlier, I have one of the numbers here, is American Express. And here's why. If we scroll all the way down here, I did the American Express one. I opened up for you guys on a video, I believe about 2 weeks ago. We're doing this year. Opened up July 3rd before market closed, before the 4th of July weekend, and we paid $132 for this contract here. And what you will notice is, again, my 2 strikes were $350 and $310. And at the time of me opening this position, it was like $328 or so. But what has seemed to happen with American Express ever since July 3rd, if you take a look, there's July 3rd, guys, right there. Whoop. And ever since then, it's been from $328 all the way down now to about $311. So it's lost about 5%. The point of these trades here is to close the short legs for profit and then to leave a straddle for earnings. And the goal is to have this kind of trade sideways up until earnings. That implied volatility builds up a little bit, and then we're able to maximize on those expected moves. And American Express is down 5%. Not good at all. So, Fridge, what did you do to manage this trade here? And what you will notice is that I no longer have a 4 option play here. I have a 2-leg option, and what you might refer to as just a regular calendar. I closed the call sides out relatively recently because, again, it came down 5%. Those calls are going to be worth absolutely nothing, like worth like $5, $10, whatever it is. And I'll show you what I paid for to close them here. But those are basically worth nothing. So I might as well close them out now before I lose any. Well, there's still a little bit of value still left over. Might as well close them and then kind of just see how the puts play out here. So take a look at what we did here, and I'll put screenshots up on the video as well so you can see the profit losses here. So I bought to close this one back for $10. I made like $198, I think, on this one here because I opened it for $208. I bought it back for $10. I bought it back so early on because it became worth so little. There was not much value left in this position here. And if for some reason, say American Express shot up like 5% the next day for whatever reason, this would have gained back some value and I would have had to manage it again. So I closed it out. I took like 95% of the profit of this call side here. Unfortunately, since this option became worth less, so did the one I bought for, which this one I originally bought for like $248, something like that. I forgot what the exact number was. I'll put it on the screen. And I bought it back for $20. So I still took $20 back because there's still some value there. There's still some value in the option. And the probability of American Express now going to $350 when right now it's at $310. Oh my God, it's coming down even more now, dude. Like, this is crazy. With that idea in mind, it was just like, I might as well just close it out, keep the $20, call it a day. So now we're dealing with this dilemma here now. And this is a dilemma that was expected to come at some point. Again, the first two trades we did this with Delta and Nike were amazing. They did just what we wanted them to do. This right now, we're looking at a position to potentially lose on American Express. And I'm fully looking into managing this position now carefully because now I have to focus on how can I maximize these profits or at least limit my loss here. So right now we have a calendar spread here. Basically this option, as we're hoping that American Express stays above 310. And right now it's at 310. And again, we don't want to go below 310 because of the risk of early assignment and everything else of that nature. So the hope and the goal is that we don't get assigned before tomorrow. Or we could do it this way. I'm going to play this out by the market and we're going to see what happens between now and like 3:30 today. If American Express comes really down below 310, which it just went down below 310 now, I might just close the entire position here. And here's the numbers as the breakdown as to why. And this is what I think is what's going to be very, very important to know for these kind of options, advanced strategies here, is knowing when to take profits and take your losses. So right now, these two positions combined are worth about $25 in profit. 18, it keeps fluctuating a little bit here, so we're going to kind of monitor this one carefully in this case here. But we're going to take a look at the profit loss breakdown we have of American Express. And I did reorganize this table a little bit to do specifics with the profit loss of each individual leg. So it allows me to keep track of my trades better and more efficiently. So we have the short put profit loss. We have the long call ones, which again, I closed it I made $198 profit here. I put that in from when I sold it here. I took a $248 loss here. So currently we are down about $50 on this trade. Currently speaking, down about $50. If we take a look at what this is worth right now, this is worth about like $20 or so right now, give or take. The good thing is that, again, if I make $20 on this short calendar here and I'm down 50 here, I only lost about $20-something on this trade overall, which to me is actually a very good risk management play. I lost $20. And the other two times I did this trade so far, I'm up over $1,000. And I lose, $20-something on this trade here. And we also still have the Schwab one that's still open. And if we can maximize profit on Schwab, these two trades, even though one's a loss and one's a gain, these could still give us some profit overall as a result. So that's kind of what my logic is here. I want to watch this number a little bit and see what we get to by market close today. If American Express keeps coming down below 310, because it's been fighting 310 for the longest time now, it looks like, which to me makes me feel, again, this is an earnings play risk. You can sit there and say, well, Fridge, if it's come down so much, maybe earnings will be better than expected and it pumps the stock more. And you're right, maybe it does. But what also could happen is that it could plummet the stock even more. And then I get early assigned, I have to deal with the margin and stuff like that. And honestly, I might just be looking at closing this position and calling it a loss of, $25, $27, whatever the case is, and just call it a day, and move on from it. Again, right now what we're looking at is the Charles Schwab one is doing relatively well, which is amazing. And we're going to hopefully be able to close that one out for a profit. So if I can make profit on Charles Schwab and take a little bit of a loss on American Express, maybe break even, maybe a tiny % profit overall here. But this is the idea behind the management piece of it. Schwab, I haven't looked at the chart for the longest time because I haven't cared. Because again, it's trading in between the two strike prices, like basically smack down the middle. American Express has sucked to deal with because it has just been coming down and down and down and down and down. And I do not like that. Again, it was up 11, almost 12%. Now it's up about 5.5%. It's lost about half of the percent it gained from the last, month or so. So this is the downside that we're dealing with. And again, as you can see, it's coming down even a lot more now. So American Express, again, maybe the stock is being priced into earnings here. Maybe people are looking at pricing in earnings here. Honestly, I'll probably put a screenshot here of when I close this trade out here potentially, or maybe I'll just do a follow-up video and close it up later on. I'm not really sure yet. But yeah, so right now we're looking at risk management here because early assignment sucks. You have to pay $31,000. You don't have that cash available right now. You can then exercise the other one and it becomes a whole different situation. I'd rather just close this before earnings just to be on the safe side and call it a day here. So we'll see how it goes here. Again, we still have between today and tomorrow, so maybe potentially we'll see how it goes. But thank you guys so much for watching today's video. Again, if you made this far in the video, feel free to like the video and subscribe to the channel as per usual. This is kind of just gives you a glimpse as to the management side of it here. So it's not just all sunshine and rainbows here. We do have to manage these trades here to make sure we can limit our losses here. So thank you guys so much for watching today's video. We hope you're making money in the market in some way, shape, or form. And as always, I will see you guys in the next video.